Hello students, hope you are well and working hard to achieve your goals. So welcome to your commerce class. Today we will start with the next chapter, chapter number 22, insurance. In this chapter we will discuss the meaning and definition of insurance, characteristics of insurance, objectives or purposes of insurance, advantages or importance of insurance, reinsurance and double insurance, and the last one is principles of insurance. So today we are going to discuss the meaning and definition of insurance, its characteristics, objectives or purposes, advantages or importance, and the last reinsurance and double insurance. So first of all, we will understand the meaning of insurance with the help of example. So in this, there is a person named as Weber who takes a life insurance policy of rupees 6 lakh of 5 years from company A. And company A is called as an insurance company who gives a insurance to Weber. So in this contract, what actually the thing is that Weber pays 10,000 every month to the insurance company. 10,000 means that 6 lakh is the policy and we have to divide this term into the various months. So first of all we have to convert 5 years into a month and then we have to divide these terms. And we get a 10,000 that the Weber has to pay every month, and this amount is called as a insurance premium. And in return, the company A will provide this money to Weber's family if he dies in between these 5 years, or if he is alive. Then at the end of the contract, the complete money is given to Weber. Likewise, we will take one another example. In this, that Ajit Trading Company gets its shop insured of rupees 1,20,000 with an insurance company for 1 year. It will pay to the insurance company an amount called premium as 1,20,000 divided by 12 months is equals to 10,000, and 10,000 is called as the premium. So now suppose the shop gets destroyed by fire. Now the insurance company has to pay an amount for the loss of the shop, that is rupees 1,20,000, and this is called as an insurance. So the insurance is the means of protection from financial loss. Financial loss in the kind of money, property like we include it in equipment, vehicles, likewise building, all are included in a financial loss. So insurance is a contract in which a sum of money is paid by the insured in consideration of the insurers incurring the risk of paying a large sum upon a given contingency. So now simply we can say that as insurance is a contract of indemnity in which the insurance company or the insurer agrees to pay certain sum of money to compensate loss caused by the occurrence of an uncertain event. Uncertain event in the form of death or some accident, and in consideration of certain periodical payment, and this payment as we can include it as a monthly, quarterly, which we called it as a premium. So now there are some top best life insurance companies that provides a life insurance to the people of the country, like LIC, then Birla Sun Life Insurance, HDFC Life Insurance Company, Bajaj, Reliance, Tata AIG Life Insurance Company, Max Life Insurance. Likewise, we have another life insurance companies like Bharti, ICICI, HDFC, Oriental. Means all are providing the insurance to the people and to the business of the enterprises. So now we will discuss the characteristics of insurance. So its first characteristic is that it involves two parties. For example, that there is a first person named as Weber is called as insured, who takes a life insurance policy from the company A. Company A means an insurance company like HDFC, ICICI, Birla, Reliance. And these insurance companies are called as an insurer. So for any insurance contract, there are two parties that are always in the contract. One whose insurance is done, called as insured, and the other who does the insurance is known as insurer. Then the second characteristic is that it is based on utmost good faith. For example, like a person while getting his godown insured does not inform the insurance company that there is a petrol pump near the godown. Similarly, if a person is getting his life insured, does not tell that he has TB. So we can say that utmost good faith means that the insured person will provide each and every information related to the insurance to the insurer. Insurer means that the insurance company like HDFC, ICICI or Reliance. So in the same manner, the insurance company should also disclose all the terms and conditions related to the insurance policy that has to be taken by a insured. Insured is a person who actually taken the policy. Now the third characteristic is that the payment of premium. Like in this, that the Weber who takes a life insurance policy of rupees 6 lakh of 5 years from the company A. It means that the Weber has to pay 10,000 every month to insurance company, as 6 lakh divided by the 60 months, as there are involved of 5 years. So then we have to calculate our premium, and the premium amount is 10,000, and this amount has to be paid by the Weber. So the insurance company takes the responsibility of risk only if some periodic fee is paid by the insured, and this periodic monthly or quarterly fee is called as insurance premium. So the fourth characteristic is that the compensation for actual loss. For example, like Weber who takes a life insurance policy from company A and pays rupees 10,000 as insurance premium. So in return, the company A will provide the money to Weber if he dies in between these 5 years. Then this money is provided to his family, or if he alive at the end of the contract, the whole money is given to Weber. So in this way, the contract is completed. So the objective of insurance is fulfilled only at the time of happening of actual loss. In case of insurance of some property, damage of the property will be the actual loss, while in case of life insurance, death of the insured before a certain date or insured living even after the certain date, both are considered as actual loss. So at the death of the insured, the money is provided to his family who are the nominees, or if he alive after the certain date, then the money is provided to that person. So this is called as a insurance. Next one is that the based on cooperative system. So insurance is based on a cooperative system, as it is a cooperative form of distributing a certain risk over a group of persons who are exposed to it. Sixth characteristic is their coverage of expected risk. For example, as company A covers the risk of the life of Weber. So insurance simply provides a security expected to the business risk. Seventh is that the transfer of expected loss. So company A compensates the money to his family if Weber dies. Means the transfer of risk from Weber to company A. So insurance is a contract under which the responsibility of risk is transferred from one party to another party. Eighth one is that the security and investment. For example, like Weber has a security and investment of his life that in case of any accident, disease, he has not to worry about the money of his treatment. So life insurance contains both the elements of security as well as investment of money for future. And the last one is that ownership not compulsory. For example, like Saurabh has taken a fire insurance of rented shop where he has a work of electronics. So it is not necessary to be the owner of the property for which the insurance is being bought. So in these characteristics we have discussed that there must be two parties. It is based on utmost good faith. Then it is a form of cooperative system. It covers the expected risk, transfer of expected loss to one person to the other person, then payment of premium, compensation for actual loss, security and investment, and the last one is ownership not compulsory. So now we will discuss our objectives. Objectives of insurance. So in this, that it provides or it helps in removing uncertainty in life or in property. Then second one is to provide security of money in future. Then to develop a form of social cooperation which helps a man to share his risks with others, because losses suffered by one person are spread over the others member of the society. It helps businessmen in carrying on the business with confidence and the peace of mind. And then it provides an opportunity to a businessman to develop a sense of independence, security, and freedom from anxiety. It stimulates expansion of trade operations to a great extent. So in these ways that the insurance provides objectives or the importance in the various people's life. So next we will discuss the advantages or importance of insurance. First of all, that it provides advantages to businessmen, that it provides protection of the business, as any risk can be insured and the payment is provided by the insurance company. So in this way the protection, stability in business can be attained, because the businessman has not to worry about the money when if he find any problem in the business. Then next one is financial assistance. Financial assistance, we can say that the amount of the money can be easily getting by the insurance. So it is provides a financial assistance by the insurance company. Then easy to get loan, as insurance policy is to be given as by the guarantee to the banks, and in return the businessmen get loan. After that, it increases the efficiency of the business enterprise, because they have not to worry about any of the problem that can be arise in future. So when the problems are not in a mind, we work with our great efficiency. Then next one, that advantages that provides to the public. So in this, that again it provides economy and security against theft and burglary. Means in this, that there is a security of the payment also, and the economy also, that the insurances are provided to the people at their according to the needs of the people. So in this way the economy is there. Then security against accidents, like public have a security of car insurance, health insurance. So in this way that the advantages are provided to the public. After that, it provides advantages to the society also, like more funds for investments. Means that the society has now a more funds as in the form of insurance company, and they invest this money to some other productive purpose, and this money is not blocked in the hands of the public. Then helpful in national development, because the money that is invested some productive purposes, in return we get a national income, and in this way the national development is to be achieved in India or in any country. Then it creates employment opportunities, education facilities are provided, and the last one, that the social security is given in society. Social security in the form of life of a person. Education facilities are provided, like when this money is invested, that means first of all it creates employment opportunities, means the new jobs, new projects are to be done. So the people has money to earn, and in this way they will provide good education to their children. So that means the money is invested by the insurance company. So these are the advantages that are provided by the insurance in real field. So the next we will discuss the main topic, that is reinsurance. So first of all we will take an example of reinsurance, as Murari Lal gets his house insured for rupees 50,000 with Bharat Insurance Company. So this company transfers the risk of rupees 25,000 out of it to Madras Insurance Company. Now what actually happened, that Murari Lal takes an insurance from one company, that is Bharat Insurance Company, but Bharat Insurance Company transfers half of the amount to some other company, that is Madras Insurance Company. So if the house gets destroyed by fire, then Bharat Insurance Company will give rupees 50,000 to Murari Lal, because Murari Lal has takes insurance policy from Bharat Insurance Company, and take rupees 25,000 from Madras Insurance Company. Who will take this money? That the Bharat Insurance Company, because they will get insurance from the Madras Insurance Company of rupees 25,000, and this is called as a reinsurance. Now we will go with the meaning, that reinsurance occurs when multiple insurance companies share risk by purchasing insurance policies from other insurers, not an insured but insurers, to limit their own total loss in case of disaster. So in simple terms, reinsurance is insurance for insurance companies, not an insured. So it is means by which an insurance company can protect itself from risk of more amount. That is called as a reinsurance. Then the next one is double insurance. Now in this, the double insurance is applicable in case of insured and reinsurance is applicable in the case of insurer, means insurance company. That is the difference between these two terms. So now in this, first of all, we will take an example. Sahil insures his motorcycle worth rupees 1 lakh with 3 insurers, means with 3 insurance companies. First one is X as rupees 50,000, from Y rupees 30,000 and from Z is rupees 20,000. In this way, he insured his motorcycle worth rupees 1 lakh. Likewise, Sarita takes 3 life insurance policies of rupees 50,000 each, and this is a case of double insurance, means they will take a insurance of the same property from more than one insurer. So the property or the life is got insured from more than one insurers simultaneously. It is called as double insurance. For example, like Sachin has a property of worth rupees 2 lakh. He takes insurance from company A and a company B. So if the property damages, then company A and B both will compensate, but not more than 2 lakh, because insurance company has a motive only to compensate the damage. So it means that Sachin pays more premium but not gets benefited, because insurance companies has a motive to compensate but not to give profits to the insured. So a property can be got insured from a number of insurance companies simultaneously. A person can also take many life insurance policies. If a property or life is got insured from more than one insurers simultaneously, it is called as double insurance. So in case of life insurance, policyholder can receive claims from all the companies, but in case of fire and the other insurances like health, property, the various companies jointly pay the claim, which cannot exceed the actual damage or actual loss. This is the main motive of the double insurance. So today we have discussed the meaning and definition of insurance, then its characteristics, objectives, advantages. Then we have discussed that what is reinsurance and the double insurance. So these are the topics that we have done today. So now the time is for your homework. So your first question is, insurance is a method of spreading risks. In the light of this statement, explain how does insurance helps in minimizing business risks. Then your second question is, discuss the advantages of insurance to businessmen and the public. Your third question is, explain the characteristics of insurance with examples. And the last question is, define the terms with suitable examples, that reinsurance and the second term is double insurance. So go through the other YouTube links also, so that you can get the more knowledge of these points, like the characteristics, importance, then reinsurance or double insurance, so that you are able to write the answer of these questions.